on episode 92 of the Insurtech Geek podcast, talking about analytics and intelligence with Leandro DalleMule from Planck. The Insurtech Geek podcast, powered by JB Knowledge, is all about technology that's transforming and disrupting the insurance world. We'll be interviewing guests and doing deep dives into specific tech we see changing the industry. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. And we are here with our guest, Leandro. How is it going? Leandro, you joining us from Connecticut today, I hear.
Yeah, James. Everything's going fine. Still summer, as you know, though you're a little bit, I guess nicer weather than here. We've got like the 90 degrees again today.
Surprisingly, yes, it is nicer weather in Michigan than in Connecticut.
Give me another month.
I think we're at a similar latitude, but
weird.
Somehow I'm getting better stuff because it's 75 and sunny today.
No, it's all good. I can't complain. It's gonna get cold pretty quickly. So
yeah. So you're near the city, huh?
Yeah. Well, that's the reason, right? It's strategically positioned, bought the house near the city because I've been working financial services since I can't remember, and my last job at AIG required me to commute every single day.
Wow.
So it was about an hour and 45. Each way, of course, which I do not miss.
That's a hike.
It's a hike, man, and I do not miss, right? Because all the way to Water Street, where AIG was based, and then back every single day. There's only so much you can do on the train. Yeah, you got a train, got a subway. We had, that little bit of walk. It was a hike, really. So I did it for many, many years, right? Before AIG, I did it for Citibank and BlackRock and Deloitte and the list goes on and on. So
I feel like those days are, I don't want to say permanently over, but they feel like they're over.
I think they're over, right? I think they're over. I look at the parking lot in my town. We used to be like a very hot commodity. I remember, right? Because I never got a permanent spot because you had to go in line and it will take you 5 years, if you're lucky, and you got to pay a premium, of course, and yada, yada, yada. And now it's half empty, right? So I guess that commodity, the hot commodity, whoever could sell it should have sold it before COVID. And now, it's just like old times, you used to buy a telephone line. I think you're not that young, right, James? So, you used to, you
43.
Yeah. Okay. I'm 49. So it's like, yeah. So you probably remember that you buy the line, right? It's an asset, right? I own that number. It was the same thing for the parking lot, and now it's all gone.
Crazy.
Yeah.
Well, we're going to talk about AI and Planck and all that stuff in a second. But before we do, I want to talk about you. I want to talk about your background. You're Brazilian, although Italian family in Brazil. I employ a lot of people in Argentina. I have a lot of Italians in Argentina.
Yeah, I guess.
And I just actually went to France in the beginning of June, and I noticed how much France and Paris reminded me of Buenos Aires. So, what most Americans, U.S. Americans, by the way, my Argentinians, of course, get offended by everything, right? Argentinians are very, I love my Argentinians, but they get really bent out of shape when I say Americans. I have to say U.S. Americans because they consider themselves Americans as well.
Yeah, I heard that.
They're South Americans. France and Italy had a huge outsized influence on Brazil and Argentina. So you're Italian family, born and raised in Brazil. You got a mechanical engineering degree there from Sao Paulo University.
Yep.
And then you went on looks like you went to Chicago.
I did.
Just across the lake from me for your MBA.
Yeah. Yeah. It was back in 2001.
How did you do with the Chicago winters?
It wasn't easy at the beginning, to be honest. I will never forget, man. My wife and I actually, we both got, we moved over Northwestern, right? We got our masters at Kellogg, and I remember the first winter. I will never forget this. The heater in the bathroom in the apartment we're living in, it was immediately right below the window. And yet, when we stayed like maybe a week out, and we left the apartment closed. When we came back, I remember there was like a thick ice cover inside, right, with the heater on. So I'm like, oh my God, imagine how cold it was outside when we were here. Like, how is that even possible, right? But I got used to it, right?
Yeah, that's.
Now I have more problems with the heat than with the cold. So
yeah, that's pretty cold. So you adjusted from the hot and humid of Brazil to the cold winters of Chicago. You went to Harvard for a graduate certificate. You got a master's at Columbia in
math.
into the University of New York.
Yeah,
So you definitely have educated yourself, but
I did.
you've also worked in a broad array of companies. You worked in I would almost call it the national industry of Brazil, the petroleum petroleum industry.
Hmm.
You did a pretty long stint in oil and gas, didn't you?
I did. I did. It was my first job out of college. It's funny because in even though engineering, right, it's a 5-year full-time commitment in Brazil, different than the US, right? You don't major in mechanical engineering. You end up, after 5 years full-time, you don't have an opportunity to learn anything else but engineering and mechanical engineering. So, but I never got a job in mechanical engineering because at the very start, when I was interviewing for ExxonMobil, they thought that I was a much better salesman than an engineer. So they put me in the sort of to talk to the sales folks. So that's where my career took off in marketing and sales instead of engineering. But I did spend my first 5 years or so out of college with Exxon, which was a great school. I mean, to be honest, in hindsight, I remember knowing nothing about management. Um, my 21, 22-year-old kid. And I'm like, oh, they're doing this wrong. They're doing that wrong. And if I look at now, tremendous company, right? It's amazing. No wonder they have been around for hundreds of years nearly. Right. And it was a great school. Right. So, but I didn't want to change. Right. So going back again, 22 years ago, I said, okay, if I want to get out of marketing or just expand my knowledge and then get out eventually of the oil and gas industry, how do I do it? Right. So an MBA was the door to open sort of new doors, and that's why we decided to come over, and that the rest is sort of history.
That makes sense. Total sense. So you worked over in GE Capital and consumer finance. You got into
Yeah.
risk management. I'm guessing it looks like GE is really where you had your first taste of insurance and risk management. Is that right?
Yeah, that's right. That's right. And going beyond that, I mean, I'm kind of laughing because if you look at the years that I work at GE, there was something that also happened there. My last role there was a global mortgage risk manager around 2004, 5, 6. So you remember what happened back then.
The superheated run up of the global of the US
Yeah,
mortgage industry that completely collapsed in 2007 and 8.
exactly. And not just the US. I mean, it was a global mortgage. The GE back then had about a $40 billion mortgage book of business, which, by the way, it was actually kept in the balance sheet because it was GE, right? The good old might GE could keep $40 billion of mortgage paper on the balance sheet. And yeah, back then it was a great idea. I spent nearly 1 year in Italy setting up a GE bank there. It was my first, I guess, startup feeling, although backed by GE, right? It was the CEO and myself, and I was playing many roles, risk, finance, operations, everything. And guess what, right? Back in 2004, what we're going to sell in Italy, how about subprime mortgages?
Why not?
That sounds like a great idea, right?
Why don't we fractionalize subprime mortgages, split them up, and then pretend that by splitting them up, we actually reduce the risk?
The risk is gone. I know. What a brilliant idea.
So if we take 100,000 mortgages and we fractionalize all of them, and then we blend them all together in a giant financial blender, and then we slice them up into these debt obligations,
People are going to buy it.
then the credit quality of the blended drink is somehow better than the credit quality of all the underlying assets.
Of course. And they're completely uncorrelated, by the way. So if house prices fluctuate, nothing is going to happen to that paper. So yeah, so we did that. Actually, that bank that we built in Italy got acquired by Deutsche Bank, I remember, a couple of years before the recession. But then you fast forward this to 2006, when I finally said, guys, this thing's going to blow up. So I left, right? I was maybe 1 year ahead of that curve, but eventually it did blow up, as we all know. Incentives were completely misaligned, let's put it this way. So whatever is left of GE today, I mean, part of it, unfortunately, right? It's such a great company. It's due to what happened there, right? And the amount of risk that they took, both in GE consumer as well in GE commercial finance, right? Both of them, consumer finance, commercial finance, were leveraged at the point where, I mean, mortgage, right? Without getting to the specifics of finance, but, they were leveraged like 100 to 1. It's secured, right? There's a house behind it, so no risk. House prices will never go down, And I heard that, and I'm like, I think they're going down. And I remember like they start falling like like a dominoes. And the first one I remember, it was Australia, where we had very two large mortgage companies. I mean, GE, and then the second one was the UK, and then it was just a matter of time until the US collapsed, and the US was like the third big one. So yeah, interesting times.
Yeah, it is interesting times. Very interesting times. So, and we're repeating it right now. By the way,
it's amazing. It's human nature. Human nature. We won't learn. Right.
We're doing it all again.
Right. Doing it all again.
There are people getting interest-only mortgages right now, and there are people that, because the rates are up, they're moving to 5-year ARMs, adjustable rate mortgages, because they want the lower rate for 5 years, which means that 5 years from now we're going to have a really bad situation.
I know it is amazing, and it's funny thing is, especially if you look at going back there, I remember my last period with GE when the market was drying, and we couldn't sell those mortgages right through Lehman Brothers or through other investment banks. We found a great solution, which was we're going to create this mortgage insurance, and the provider, or we're going to get mortgage insurance, and the provider of mortgage insurance back then was AIG. So I remember dealing with AIG, and then fast forward 10 years later, I was working for AIG, and then when everything collapsed, you remember the TARP, I think it was $700 billion.
Yeah.
Right.
Most of it went to AIG.
Most went to AIG. And who managed the TARP for AIG and Citibank? BlackRock. So if you look at my resume, you wonder, how can I be involved with all the companies that were part of that? I mean, because it started with GE, and then we got from AIG. I worked for AIG, and then Citibank collapsed. I worked for Citi, and then BlackRock managed everything. Actually, when I joined BlackRock, AIG had just paid, off everything that they got back, right? With the Bob.
Well, they paid off the TARP plus. They paid all the interest too. So
according to Bob Benham, he reminded everybody of it.
Yeah,
that he didn't get even a thank you from the president.
Yeah, even though he would have defaulted without it, but that's okay.
Yeah, it was Bob Benham. Yeah, it was.
I remember all that.
What a care.
So you've been in the middle of a whole bunch of interesting transactions.
Yeah.
You've seen a lot of things that evolve with data analytics, with risk management, with just the financial services business in general.
Mm-hmm.
And there's of course a huge blend between loan companies and insurance companies, because insurance companies provide insurance on loan defaults, which you just mentioned. So there's the two industries are inextricably intertwined.
Yeah.
It looks like your first insurance position really was when it came to AIG, because that's when you started jumping into being a chief data officer for commercial insurance. What was the leap to really being dedicated to insurance? Because up until that point, you'd had I would call it an ancillary or tangential relationship with insurance and risk.
That is right.
What made you want to jump in directly for working for one of the largest insurance companies in the country?
Yeah, I had, what is not very clear is I did have a lot of insurance experience when I was working with Deloitte.
Yeah.
Because Deloitte, it goes back to your question about analytics, how it all started, right? I mean, it wasn't even called analytics or AI, right? We didn't have a name for it, right? When I was at Deloitte, actually what has become actually Deloitte Analytics today, which is a whole practice with hundreds of millions of dollars in revenue. It was born out of the actuary practice, so which was obviously insurance. So it's interesting that today what it's called Deloitte Analytics, and they supply analytics solutions, consulting across industries. It started with insurance, right? And I was there in Hartford, which was one of the places I was based when I was working for Deloitte. And that's when I got to, get to know the actuaries and get to know the actuarial science. I'm not an actuary. I could not get that far, even if I wanted to, I guess. But I familiarized myself with it. And then, of course, in the data science became a thing, right? And that's sort of how it evolved. But you're right. So there was a lot of that period that I had within Deloitte that it was primarily focused on insurance. And then there was Citibank and which was analytics, a lot of loans and cards, mortgage, and other kinds of analytics, very interesting analytics. But you're correct. When I transitioned to AIG, it was really 100% insurance data, right? As chief data officer initially for the property and casualty group. AIG back then was split into two big groups globally, P&C and life and retirement, right? So I was leading the data efforts, which was brand new, right? We're just creating that whole function from zero. So up to that point, AIG did not have any chief data officer. Heather Wilson was the global chief data officer. I was reporting to her with P&C responsibilities, data responsibilities, and another colleague of mine, Tom Warden, was the life and retirement. So that's sort of how we struggled, and we had to build it from ground up.
So let's talk about that job title.
That was interesting. Yeah.
You could make CDO mean anything. So what does a chief data officer do every day?
Absolutely.
Big picture task, but then like on a daily basis, what do they actually do?
Yeah. And by the way, it can report to anybody too. I still think there is no clear structure where a CDO should sit. I still believe that it depends on every organization, every industry. But from my point of view, and what I did, it was we were focused on sort of the sub areas of the data management. Let's put it this way, right? So it was not building models to some extent, right? It's not the sexy part. It's plumbing. That's how I always characterized it. It's not about fancy dashboards or very cool predictive models. It's about plumbing. And plumbing, I mean, we would slice, right, the work, and the organization to some extent will mimic that into data governance. Who owns the data? Somebody needs to be responsible for the data. I wasn't. I want the business to be, right? Because the reason is I'm the custodian of that data, but the business needs to, the P&L owner of a line of business, let's say commercial auto, right? He needs to own those data elements, right? So governance is important. Quality is another element, right? So data quality, how can we measure data quality? How can we improve data quality? So that was the other pillar, right? The third pillar, especially in the case of AIG, was sort of data accessibility. How can I make it and control, right? Control in a controlled environment. Because you do have PII, you do have sensitive data, you do have claims data, which is extremely sensitive, as you know. So how do you control access to that data and yet make it available for consumption, right? So if you think about it, those are like in my mind, the three big pillars, right? So if I make data available in a controlled environment, I have this governed, right, from a definition perspective. So always speaking the same language. What is a claim, right? That's one that, by the way, simple question, right? Took us more than 6 months to answer. When does a claim start? How do we agree on some of the definitions of very basic data elements? That's covered. And then the third one is, okay, data is not good. The quality of the data is not good. What are we going to do about it, right? How are we going to measure this? How are we going to make that data with such a quality that it can be consumed, it can be trusted? So that was the day job, really.
That's an excellent definition. Thank you for diving into the minutia, because I think a lot of companies look at that position and go, well, I'm not big enough for a chief data officer. I would argue that a CDO or maybe a vice president of data, if you don't want to call it a chief, that needs to be established fairly early on. I mean, you're talking about $100 million organizations need to have them. This is not a multi-billion-dollar problem. This is at a much smaller level because of the importance of securing your data, making it available and accessible, connecting it to everybody else, and governing who can read and write from it. These are really, considering insurance is literally a data business. I mean, it's not I respect that relationships drive a lot of decisions, and ultimately the industry takes risks. All of that is based on data. There is no physical product of insurance. There is none.
Correct.
So data is the product. Whether it's data that's wrapped up in a policy, in a contract, or whether all of that is the only end product that we have in this industry. And so I think that's something that's really important. Data standards are wonderful when they exist. I was recently, in the last several months, made light of are made aware of the Object Management Group, OMG, Property and Casualty Data Model, which was established in November of 2014. And one of the things that was really so impactful, and I was kicking myself for not knowing about this earlier, because I could have used this a long time ago. The contributors on this was Ace Insurance, Cindy Mike Associates, CSC, CTS, Gale Austin, Garza Data, Harleysville Insurance Group, IBM Corporation, Liquid Hub, Mark Gorman Associates, Object Management Group, Penn National Insurance, TCS, and 21st Century Insurance all collaborated to put together a 48-page description. Let me see how many pages this is, of a data model for P&C insurance. And no, way more than 48 pages. Good Lord. Yeah, 174 pages of common business terms, just agreeing on what the terms are.
Exactly. And it's extremely difficult.
Yeah, it's extremely difficult. So the terms alone, then agreeing on field names, then agreeing on data models. I mean, if y'all haven't read this, it's the OMG, which of course I just say stands for, oh my gosh, I can't believe I didn't read this before. PNC data model. They did a ton of work on this, and it really helps understand how the plumbing is connected, at least at these organizations.
You're right.
So let's go beyond this. You spend a good bit of time organizing data. What was the biggest challenge? Was it the fact that you had to like interconnect 35 legacy mainframe systems? And
I wish it were just 35.
maybe 35 for one line of business. I mean,
in the thousands. Yeah. It was amazing.
Tons of databases, tons of systems.
I'll give an idea, right, of the magnitude of the beast. It's a house of cards, right? If you look at the sort of the data flows, not the architecture, but the data flow that we actually built. It took us a couple of years to build it. It's just mind-boggling, right? But it's this big house of cards. If you think about it, it's like AIG, over 100 years old company. Acquisitions. There was a lot of times during a long period of time that it was a great idea to, instead of buy something, I'm going to build something, right? Build versus buy was not even a topic. We're going to build everything because we can, which is maybe was the right decision at the time. I wasn't there. The point is, fast forward is to recent years, you have this house of cards and all the systems are super integrated to each other. They're fairly old. And by old, I mean, okay, without being very specific in which systems were built in assembler. For those who know what assembler is, I know you do. Yeah, me too, right? I actually took an assembler course.
I did as well. It was mind-numbing.
I don't know why. I don't know why I did it. I know I did it many years ago.
Me too, in the 90s. When I did, I was like, can I please go back to writing an object-oriented code, please?
I don't know why. It was like, I think I'm going to learn this machine, right? How the machines speak. But yeah, so fast forward to recent, I mean, I don't know today, right? I left AIG a few years ago, but yeah, they're still built in assembler. Try to come up with a drop-down button in assembler. You can't. Try to add another data field. You can't. Or COBOL. COBOL is still very common, right? So you have this very complex system of integrated old things. And how do you solve for that, right? You had the tech that keeps consuming and most of your IT resources, money and people. That is one of the barriers for investing in new technology, right? Because there's only so much money you have to keep them alive, right? The systems, otherwise you don't have a business. So a lot of the money goes there. A lot of the efforts go there, and it's very hard to improve the whole system without breaking many eggs, right? In the process, it has to be done. Right, because otherwise, the reality is COBOL, even COBOL, right? When we tried to retire 2,000 COBOL programs, we eventually did it, but we had to go back and hire people who he retired.
Yeah.
But they were the only people who wrote that because everything is compiled. So we were like, oh my God. And they actually came back and we did it.
Probably no system documentation.
No, zero. It's all in their heads.
No test plans.
Yeah. And they charge $600 an hour because they could. And honestly, I would if I were in their position, right? So it's like, sure. That being said, right, there are new technologies that are helping us to get there, right? To overcome that big barrier, which is this old systems built over nearly 100 years.
Well, let's jump to the current thing and spend our last 15 minutes here talking about the present, because we've talked about what a chief data officer is and what some of the challenges in plumbing data in large insurance corporations. By the way, this is why it takes so long to add states and lines and to modify lines of business. Reason number one is a huge patchwork of legacy systems that still work and function really well and contain all the business logic of that particular line of business and all the nuance to the contracts that company covers. So let's talk about Planck. 2018, you leave AIG and go over to be general manager of North America at Planck. What does Planck do, and why did you go over to it?
I answered why I came over first, because it's related to what we do. And then I'll go to what we do in detail. But I came over for a couple of reasons. One, the person who, recruit me is one of our co-founders, David Shapiro. He used to be, before he retired, the CEO for Ernix. And we worked together back at Deloitte, so we go back 15 years plus. So that's sort of how it all started. I also met, when I was at AIG, I met with our founder and CEO, Elad. Right? He came to my office to talk about Planck resolution back then in 2017. So I already knew about the company, right? And I knew what the technology that they were building was supposed to do. But that was back in 2017. Fast forward to 2018, they invite me if I would like to join the company. And I did my due diligence, my first startup. I've been working in these huge, companies before. And then I have a quick funny story later about this. But I said, okay, I got to check, right? I mean, I'm going from 200,000 people, and my team alone at AIG was over 1,000 people, right, in data management. To how many again, right? So I had to do my own due diligence. They did theirs, and we kind of met in the middle, I guess. And again, the big reason really is the technology that we built and we continue to build will allow carriers to leapfrog. Not just carriers, right? I mean, MGAs and overall insurance players leapfrog this years of being behind in terms of data and insight and intelligence. Let's call it this way, right? We're calling ourselves a cognitive business analytics platform, which is a big long name, right? Because it's more than AI, right?
It's a mouthful.
It is a mouthful. We took us a while to come up with it. Short is CBA, but the idea is really, how can I tap into this vast wealth of data that is out there and keeps growing exponentially? We all know, right? On the web. How can I tap into that and mine it to get insights that can help business? In our case, commercial insurance, to be very specific. For example, we are not a data aggregator. That would be too easy, right? We're not collecting data from multiple sources and putting them together. What I like to say, and this is Elad's analogy that I really like, is like we like to create, it's not about finding the needle in a haystack. It's about creating gold from hay.
Yeah.
So we'll get a lot of that data, right? Sometimes it's the same data point. So it's, let's say, hours of operation of a business. So sometimes we're going to find that data everywhere. But there are other insights that we can generate, like the percentage of liquor receipts in a bar. There's no source that I can tap into that it's going to give me that. But if I have enough data about that bar out there on the web, I can then train models. And then going back to AI, machine learning, right? All these cool names. I will train the models, right, to estimate fairly accurately what is the percentage, of liquor receipt in that restaurant, right? In that, bar should be close to 100%. But so if it is a restaurant, right, it's, as you know, it's super important for rating. So you want to know if it's above 35%, it's above 50%, then maybe it's a bar, it's not a restaurant, right? But that data point is nowhere to be found, right? Unless I get access to the financials of that restaurant, which I won't. But it can be generated. And I think that is really where we shine, is that ability to tap into everything real time, right? Bring it in, digest, because the models are trained and keep being retrained as we get more and more feedback from our customers and our own training, right? So the models improve because they learn, and we're able to produce even better, faster results to give those insights, right? To give that intelligence to the carriers, to the MGAs, to the reinsurers, so they can make better business decisions. And then the underwriting, pricing, lead generation. We've been expanding our offerings now, but based on the same sort of core technology.
So what's the number one problem people are asking to solve? Is it better reserve setting? Is it better analytics around analyzing a claim and recommending treatments? Is it I've seen a lot of really great applications of data in insurance. I mean, what are the top applications you're seeing people trying to deliver?
I mean, the top is really today is around pricing, right? So how can I, which is something it wasn't the top. The top, I'll say 2 years ago, it was more like, I have a digital portal. I need to pre-fill this data very quickly because what's the point, right? If I'm going from paper to
portal, that's like meat and potatoes automation. Yeah,
it is, right? But yet very difficult to get all the data and pre-fill it within seconds. That was really But we've seen that that has evolved with our customers and even generally in the market. Now we feel that pricing and the ability to know more than my competitor has become more interesting. Let me elaborate a little bit on it. For instance, let's say that I have all these insights, right? 150 insights about a restaurant. Today, how is pricing done for that? Quote, right? A quote is generated based on a handful, right?
Yeah.
If it's workers' comp, it's the usual suspects. It is going to be number of employees, payroll, revenue, the class that you're in, and maybe location. Okay, those 5 will probably determine the vast majority of your rate. How about now if I have access to all this different information? For example, how about if I know that, or I would like to test, and as a matter of fact, we know that for a fact now, that the quality of the management of that business has, the higher the quality, right, the lower the probability for workers' comp claims. Well, now I have that correlation very strong. If I'm gonna able to file another rate with the 50 state regulators, that's a different story. But at the very least, I can include that in my underwriting criteria. At the very least, I can I can determine my risk appetite, knowing more than just payroll, number of employees, revenue, class, location. Right. That's where we see the most interest now. It was something that, to be honest, James, even our customers and carriers were very reluctant to share their loss data with us, to share their claims activity data with us, historically speaking, because they're like, no, this is my proprietary. But now they are.
They probably didn't want to risk that it might go to somebody else or help somebody else make better decisions, right?
Correct. But now they're sharing it, or we're providing the insights, vice versa, right? And they're doing the analysis themselves. But we have now this both way going, and we see that. And I believe that this is where the big, bucks are. There are also improvements. We talk about the portal pre-filling. There's also operational improvements in expense ratios, such as, hey, your underwriter takes 3 hours after he gets a submission, right, an application, because he got to check everything and eventually even pick up the phone and calls the agent or calls the business owner directly. It takes 3 hours. You know what? Automate everything with us. This can be done in 10 minutes, right? So it adds up. Right, if you have.
Are you comboing robotic process automation with the analytics suite?
Not so much robotic process, but what we do is we integrate the API to, for example, an underwriting portal of a few of our customers, right? And they will get flags. It's highly configurable. So, hey, I would like to get flags in certain attributes that either will trigger automatic decline or will trigger further evaluation. Right. So the underwriters are now, and you go one step above that, you start prioritizing all the submissions that you're getting in terms of, how much work you have to put into them. Right. So it's not so much about automating everything in the process, but it's providing more data, more insights very quickly. Right.
Yeah, absolutely. So what's the end game? What's the data end game? Are we trying to automate premiums? I mean, what are we trying to do? Automated underwriting? Are we trying to automatically set reserves and auto adjudication of claims? I mean, what do you think end state is? Are we gonna remove people from the equation and get data models and machine learning models so intelligent that they can make all of these risk decisions? I mean, where does it stop? Where does it end? What's the end state?
Yeah, I don't think we're going to get all the way there. In commercial, I'm talking about commercial lines.
Yeah.
Right? Personal lines, different story. Frequency is so high versus severity that allows us to get there where we are today. Right? You can go online, you can do everything, get a quote, you do almost everything without a human. I think commercial and the bigger, right, as you go from SME micro business to small to medium to, it becomes, as more and more complex, therefore require more and more human intervention. What we see is we make our customers, or let's say the underwriter in this case, superheroes. Actually, we have that internal definition ourselves, right? We have a Superman picture and we use it all the time because our goal is not for us to be superheroes. We want to make our customers superheroes. We want to make the underwriter be a superhero in terms of how can I leverage a platform to augment my capabilities, right? Ultimately, they're still going to make decisions, but they're going to make much wiser decisions because they have these superpowers. right? That we are giving them through analytics, through AI, right? To the ability to, tap into thousands of different sources within seconds, right? That's my take. I mean, the superhero is it's Planck's philosophy, but my take is it will never get all the way to fully automated as you get, bigger, larger businesses. Because it's just the complexities of a workers' comp policy, a property policy, a BOP, will still require, humans. Now you have the whole additional layer of, especially in the US, of the agents, right? The independent agents, the captive agents, right? And how distribution it works in commercial lines. And that's a very hard model to break, as we've seen. And that's another sort of let's say, complication to that fully automated, future mindset. But
okay,
definitely more automated, and definitely getting these guys to having the superpowers to do their job much, much, much better, more efficiently.
So I have a challenge question for you.
Yeah.
Why would a company use a system like Planck instead of building their own analytics suite with Power BI and all of the tools and or Tableau, or name any analytics suite, right? Why would they use a custom built insurance analytics suite? You're not calling yourself BI, so that's fine.
Yeah, not BI. No. Yeah, we can compare ourselves to Tableau or Power BI.
But you could use Power Apps, Power BI. You could use that whole suite and try and hack your way into building something like Planck. So
yeah,
what benefit do you think y'all bring to the table versus what's going on in a lot of insurance organizations right now is a whole lot of homegrown analytics efforts that are being driven through the Power Suite in Microsoft.
Yeah. They're different animals, right? That's just as you know. But generally speaking, right? Why wouldn't somebody build a Planck, right? Our cognitive business analytics platform. A couple of reasons. One, we've been doing this for 5 years now. So we have a few hundred insights in many different classes, right? Restaurants, contractors, auto services, healthcare, the list goes on and on. We have specific insights for workers' comp. We have specific insights for property. We have specific insights. So that's one, right? We've been doing this for a living, and the only thing we do for 5 years. So we've built that critical mass already. That's one. The second thing is our models that are at a point now that they are learning with the feedback that we get from our customers, which exponentially improves our accuracy, right? Our coverage, as we call it, hit rate. So again, very hard to get there. There were a couple of they were prospects, and I was in the sales process with them a few years ago, large insurance companies, not surprising, that said, this is great. They ran a proof of concept with us and said, we're going to do this ourselves. I said, okay, good luck. Look, guys, this is not what you do, right? You do insurance, you sell insurance, but if you want to create an AI platform, go for it. A year later, of course, I checked on both of them and they haven't gone anywhere, right? Because this is how it is, right? They have other priorities, and they do have a small data science team that is doing other things.
Building things is hard.
Building things is very hard. And this is, again, the only thing we do, right? So you have that, and we've got into this feedback loop that allows us to exponentially improve the models, and without much effort, and then which give us time and effort to actually build more models to other classes. So at this point, could a very, very large insurance company like my former employer actually decide to do it and put a lot of resources? Do they have the money? Yeah, but it's going to take them so long that I doubt that that process is going to come to fruition.
Yeah, awesome.
Executives will never have the patience. So,
well, thank you for where do people go to find out more information about Planck?
Planckdata.com. Very easy.
PLANCK data.
PLACK, like Max Planck.
Yes, planckdata.com.
The Nobel Prize winner.
Yeah, and if you're in Connecticut or New York, can people come hang out with you?
Oh, of course. Anytime. Yeah.
What's the Brazilian drink that I always get at my Brazilian?
Caipirinha.
Yeah.
Caipirinha.
Yeah.
It has to be that. That's the only one. We only have one.
It's the only one.
We only have one. I'm always right. That one.
I've had many of those. It's like in Argentina, you get Fernet Branca.
Right.
Yeah.
It's just one.
And it's funny that the Italians so heavily influenced the drinks too,
Yeah. Oh, yeah.
Fernet is an Italian after dinner drink, but they make more of it in Argentina. So, they drink it by the gallon in Argentina, man.
Yeah, well, you know that, right? Next time you meet your team there, you know this probably already, but they consider themselves not just Americans, they consider themselves Europeans more than South Americans.
Oh, yes.
So
yeah.
That caused a lot of problems with every other country, including my country, because they're like, no, guys, you're not Europeans. We're all South Americans. Like, no, we're more Europeans than you guys. And it's true, by the way. But
it's a very complicated culture, one that I happen to love, but it's also you can have a lot of fun with them.
Yeah. Oh, yeah.
Never-ending sources of entertainment. Leandro, thank you for joining me on the podcast today. I really appreciate it. It was a good conversation, and I always love talking about data and how we're using it, organizing it, structuring it, and getting better as an industry because of it. So, Leandro, thanks for joining today.
Thank you very much, James. It was a pleasure.
And thank you out there in listener land to tuning in the Data Geek Out episode 92, our interview with Leandro DalleMule from Planck. This has been the Insurtech Geek podcast, powered by JB Knowledge. That's jbknowledge.com. It's all about transforming and disrupting the insurance world. I've been your host, James Benham. That's jamesbenham.com with co-host Rob Galbraith. That's endofinsurance.com. Big thanks to Jim Greenlee, our podcast producer, Kara Dalton-Allero, our creative producer, and thank you for joining us today. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. See you next time.